right, guys, what is going on? Welcome. It is Market Maker Monday. There we go. It is Market Maker Monday. And I hope you had a good weekend. I know I did. Had a cheat day. Ate a whole bag of family size red Doritos, which is cool. You know. What the fuck? Can we get a audio and visual check? Drop a 1 if you guys can see and hear real quick. Why did my trading view just refresh like that, dog? What is going on? Drop a 1 if you got an audio and visual. I would greatly appreciate that. All right, thank you. I see it. What's good? 2020 Naruto, Sean, Felix, Ibernet, Jordan, D, Z, Mason, Marco, Toby. Yeah, today was clean. I missed it, and you know, it is what it is. It's only Monday. It's not a big deal. Oh my god, it just did that shit again, bro. What the fuck? What is going on? Manos, Marshall, G, Simon, Crispy, J, Miri, Willow, Remy, Charlie, welcome back. Convicted Capitalist, Josh, Shay, Millie, Marvelous, G, Dave G, Flacco, Bruce, Naruto, and anybody, Claudia, anybody else that I missed, let me know. Mason, what's Gucci, gang? Cameron, welcome back. I know you've been banned more than anybody else. I don't know. I don't know. What's good, Simon and Aaron? What's good, everybody? A lot of gold snipers, man. Love to see it. So, I've known about this particular concept for a while, bro. I'm like, honestly, like, you guys can see that, right? Like, you can see how it just flashes like that. What the fuck? That's like, I don't know why it's doing that. Maybe it's because of the weather, I guess. But anyway, I've known about this concept for a while, and it wasn't really something that I've utilized all that much. But the more that I've been studying and paying attention to it, I think it's not bad. The only, I guess, issue with it that I have excuse me, is the indices don't correlate the same way when it comes to this idea. So thank you, Naruto. The concept is, and look, man, this did not come from me. All right, this came from ICT, and I'm not afraid to say it. All right, I don't like the guy very much personally, but you know, he's taught a few things, and it should be clear by now that, you know, some of the things that I use are his, and this is one of them. So what he calls it is the first presentation. So what that means to me, all right, it's the first imbalance that forms after 8:30, and the imbalance that forms can't include 8:30. It has to be 8:31 or beyond that. And so when I'm looking, you know, at the market, I'm looking for direction, I'm looking for trade ideas, you know, setups, all that kind of shit. And what I was looking at today was potential upside for Nasdaq, because we had some clean highs back here, right? Low resistant highs in that manner. And then even above that, it looks better on a 5-minute chart, but 20,657, right? 657. You have more low resistant highs. And I'm looking at that like, okay, that could be an objective for today. You know, I didn't think we fucking run straight there, but I was like, you know, that could be an upside objective. And I'm looking at this, and of course the levels are still here, right? 20,482, 20,535. I don't know, Charlie. I haven't looked at New Zealand. What's good, Big James? If we go to a daily, right? You know that this was something that I pointed out to you last week on Friday, right? We overshot that gap. I said that's fine. We ended up closing inside of it, and then, you know, obviously with Sunday's open and Monday's candle, right? Today's candle, that's where that levels, or excuse me, these two levels are derived from. I gave you that last week. Okay, so if you kept it on your chart, then you would know 20,534 and 20,482. So why is that important? Well, look at the chart, bro. Like, look at the chart. We I don't even know where Sunday's open is. It's back here somewhere. I don't even know. All right, that right there, which is like, that's garbage. That's just trash. All right, so there's your like Sunday open, weekend gap. All right, nothing's really there, in my opinion. I mean, you could look, obviously there's probably something there, but in my opinion, like, it's a very small Sunday gap. Like, all right, that's, I'm looking for something beyond that. What's good, Stephanie? So anyway, the point is, we trade back into it pre-market, we rallied, obviously, and then here's your equities, right? So you can see that labeled here, 8:30, New York Stock Exchange open right there in orange. So what I was trying to show you today in the chat was just the delineation of 8:30, because again, 8:30, and then once 8:31 forms, the very first imbalance after that time period. Okay, that's, you know, what I'm trying to teach you today, which is right here. But what I'm saying is, when we're looking at price, we see it trades into Sunday's gap, or excuse me, that old daily gap or weekend gap, whatever it was I just showed you on the daily time frame. We rallied above, equities open. We have no imbalances here. We do have like a very minuscule one here, but I wouldn't count that. Okay, personally. A lot of back and forth, and then we get 846, which we do have a clear imbalance that forms at the close of 847, right? So and this is Central Time, by the way. I always got to make that a point for your own charts. So 848 and then 849 digs into it, and price respects that to then dip a little bit lower. But what is it dipping into? Guys, we went over this time and time again, right? Every concept has a premium and discount. And if you have a fat concept or a large concept, cut it in half. Okay? Every concept can be inverted. Every concept has premium and discount. Did you forget? I would hope not. I would hope not. No, John, I took notes and I look at them. Well, good. That's what you should do. That's exactly what you should do, in my opinion. Okay. So there's that old gap. All right. There's your premium and discount on that. So short-term low, we rally. That's an engineered low. In my opinion, it's just a short-term low that gets wrecked, right? But that low gets taken and we get consolidation. So the important thing here all right, for, for this lesson is, again, I'll say this one more time. It's the first imbalance that forms after 8:31 Central. It'd be 9:31 a.m. Eastern. So when we have that, cool. But am I going to short in a market that is in that Sunday's gap? Am I going to short with low resistant highs? No. Am I going to short with low resistant highs? No. So if I'm not going to short, what are we going to do? What am I going to look to do? Long. Okay. So where am I going to long at? Well, I need some sort of discount, right? I need some sort of discount. This, AKA, he calls it the first presentation. If you want to call it that, go for it. It doesn't matter to me what you call it. Names don't matter. Context does. So this is basically the first presentation. And that got inverted at 8:59 and then 9 o'clock. Pause. What's going on at 9 o'clock? Oh, I don't know, John. I don't know. It's 9 o'clock. It's 9 o'clock, dog. That's it. 9 a.m. is 9 a.m. Right. That's the 9 a.m. macro, which is 8:50 to 9:10. 8:50 to 9:10. So that is your macro. Okay. Again, just a time window. It's the first and last 10 minutes of every hour. That's the short version of it, at least. Right? What's good, Natasha? And Lee Bright. Welcome back. So remember your notes on macros. Macros, sometimes they don't do shit. All right. Sometimes, right, they either go to one of two things. One is going to be an imbalance or liquidity. Sometimes both, right? The market is it does a lot of things, right? So, but primarily it's either going to seek an imbalance or liquidity. Okay. Well, we're in that daily imbalance already at the start of the macro. And there's your MOC as well. Or yeah, your MOP, your macro opening price, right? Okay. So 850 drops down into a discount. Then it trades through that previously bearish imbalance. Now think back, folks. Think fucking back. When I first taught you the inversion. Oh man, John, that was long ago. I don't remember that. All right. Well, you suck for that. But number two, all right. I told you the inversions that I trust. The inverted imbalance that I trust more so than the other one. I trust the inversion, meaning I trust the imbalance that was once respected, then disrespected. Versus like with what I did on Nasdaq last week, I just straight up took a inverted imbalance, but it wasn't previously respected, and that's okay. That's different. That was the imbalance on the way to a liquidity run. It's different. We really don't have like this wasn't a liquidity run on this, okay? But that's still below this low. But anyway, the point is, I told you a long time ago that I trust the imbalance that was previously respected and then disrespected. So not only is this during your macro, all right, okay, it's during your macro, and it was previously respected to go lower. Now that it's been traded through, and this is the open of the 9 o'clock hour. The open of the hour. I think Jordan or somebody made an indicator for this that will display the opening of the hour. I haven't added that yet. If you want to send me the link to it, you can do that, and I'll take a gander. But look at that. Buying below the open of the hour. Oh, it's in Discord? Okay, I'll have to pin that. But yeah, I'll go take a look at it. Remember that image of the candlestick. Where are the best longs? Below the open. We're already below the open of equities. Right? That was the there it is. 20,557. We're already below equities. Okay? Now we're below the open of the hour in a macro after a previously bearish imbalance got disrespected. You see that? Cake. I just didn't take it because it happened. I mean, fam, this is a 1 minute time frame. Okay, so it happened a little bit fast. I was swapping between Nasdaq and ES, and ES had some lows in here. I was like, I don't know, I'll just wait. So I didn't end up taking it. And then I watched this shit fly, dude. I was like, oh god, missed this whole shit, dude. Because I was like, yep, there's your first target, and if need be, by the end of the day, we might get this level. And then I just watched it do this, and I said, okay, it's what I get, man. You know, it's what I get for I was literally watching this, and I was like, yeah, there's your first imbalance. Just got disrespected inside your macro. Like, that was it, bro. You guys don't listen. I know I'm all over the place. I told you I freestyle these streams. Something like this, bro. 135 points at $20 a point. What do you think the math is on that? Someone do the math. 135 times 20. What do you think that is? 135 points at $20 a point is fucking $2,700 a contract in 30 minutes. $2,700 in 30 minutes. Imagine that. But look, I've missed so many trades before. Like, I don't need, this shit doesn't even bother me anymore. To be like the rock that the waves, you know, crash into but fall still around, right? You just, resilience. You're just like, okay, well, there was another one. Moving on. So it's not all that big of a deal, but that's pretty sweet. You know what I'm saying? That's pretty sweet. That I think was it, man. Look, the rest of the day I think is gonna be pretty garbage. That's my opinion. When the markets do something like that today, or like on certain trading days, and the markets just deliver so cleanly, so precisely, so just beautiful, chef's kiss, make you want to screenshot and print it out, you know, after that it just typically sucks, right? Like, compare this delivery, beautiful upside, and then look at the rest of this. It's just chilling now. It's bullshit now, you know? And that's also kind of like what stings a little bit. It's like, all right, well, we missed the banger, and that's it, you know? Because I don't think it's going to deliver like this with the speed, the precision, in the same way in the PM session on days like this. So that kind of, you know, makes you just want to go do something else. You have a call option on triple Qs. Very nice. Drop a like if you guys got some value today. All right, I introduced something. It's not new entirely to the community. Trading community. It might be new to you guys, but again, just to cover this one more time. Excuse me. The first imbalance that forms after 831 in the equities market. Okay. Now, I haven't back tested this, but there are people out there that will say the first concept that forms after that too. Meaning it doesn't have to be an imbalance. It could be like a mitigation or some shit, which, you know, I haven't tested the validity of that. But if that's something that you want to do, then you can. So what's the exercise? Well, I just gave it to you. You can go back and you can back test this. Go look at least for Nasdaq. Okay, I can't speak for ES. I can't speak for for Dow Jones, but for ES, I mean, excuse me, for Nasdaq. Okay, for Nasdaq, you can go back to a 1 minute chart. You could back test other time frames too, but go and look at the 1 minute time frame or other time frames and look at the first imbalance that forms after the open. And, you know, see what you can find. Let's go back to Friday for a second so we can take a look. And I'll show you. Let's see. So 8:30 is here. No imbalance is here. We do get one right there. And kind of like this lack of wick. Okay. Right there. We trade lower. So the first imbalance that formed is right here. See that? When was that? 8:34. Is that after 8:30 and 8:31? Yes. It's 8:34. Okay. It's the first one because this is bearish, right? So this one was created and then this like smaller one was created after. This is the first one. Look where price stops. It does kind of, it reaches beyond that a couple points, but the body respecting that there. The open of that candle I think is right outside of it, but the bodies are closing within that. See that? The bodies are closing within that. And then what did it do? Market traded lower. So, you know, I would go back as far as trading view allows you to go. You know, keep going all the way back. Let's see, 8:30. Oh yeah, this is a solid one. 8:30 is here. 8:31 is right there. Well, that one kind of sucks, but I did see somebody post that they used this one. So, well, you know what? I guess if you include that lack of wick and then this candle, like I guess would disqualify that. So I guess this one would be the right one, if that makes sense. That lack of wick, I guess, wouldn't count. And so if you included these two together, that comes back into that. It doesn't leave a imbalance to like long, for example. So that, I guess that wouldn't count. So 8:34 does have an imbalance. It got disrespected at 8:38, and then at 8:39 it traded into and acted like an inversion. So that's not a bad example either. Short-term run on liquidity too. You guys see that? Yeah, freestyling money. Well, I freestyle every stream. That's the thing. I very rarely do I do structured streams. Bro, it's a lot of work, man. You guys are getting all this shit for free, so you know what I mean? Like, take what you can get. All right. So this is, let's see, November 13th, Wednesday of last week. Okay. Let's just mark our equities real quick so we don't get lost in the sauce here. 8:30 is here. No imbalances. That looked like it was going to be one, and then that got immediately rebalanced. We trade lower. Okay, boom. Here's one. Right? Your 8:41. There's your first one right there. Look at that shit. Gets we really don't see bullish movement at all. It just trades right through it. And then look immediately afterward, right? Put that middle line on there. Look at those wicks. Look at those bodies. Immediately becomes an inversion. Not bad, right? So how many days in a row is that where it's like, yeah, that was important? That was today. That was Friday. That was Thursday. And then we just looked at the Wednesday to 13th, right? First presentation or first imbalance after equities open. Pretty cool. Pretty cool. Excuse me. Let's do one more. Then I'll leave it, because this is the type of stuff that you need to be doing. I always tell you guys, like, yeah, you're not going to do it. Because you probably don't. You probably don't. And I wish you would. I wish you would. 835 is here. Or excuse me, 830 is here, but the first one forms here at 835. So it doesn't entirely it wasn't bullish. It got traded through, and then it doesn't become an inversion either. It kind of dances around that. So you might ask yourself, well, okay, what am I supposed to do with that? Well, look, we've only looked at a concept by itself. We haven't looked at, is there something else over here? Like previous day's high, for example? That might be important. You know what I mean? So context definitely matters. But yeah, that'll be the last day. And then, so moving forward, you guys can do that exercise. So Jordan, you have a lot of shit going on, don't you? We got to look at the macros. We got to see what each macro does. We got to see now if there's, you know, the first presentation. Is Jordan D still here? Or did he dip? Let me know. But yeah, I mean, it's cool stuff though. Like, again, I explained this last week. It's these little nuances, these little tips and tricks, if you will, like this shit down here, you know, that every concept can be premium and discount, or macros, or inversions, you know, first imbalance after equities, buying below equities or shorting above, you know, looking at what's a target and what's more of a stop loss, you know, things of that nature. You know, we could argue even that we have triple lows here. I mean, it's not very clean. It's not very, you know, I wouldn't put this in a book, but short-term low, another low, we rally a little bit, and then that third low. We have like multiple lower lows, again, heading into that discount. Then we show the evidence of no longer being bearish, and that is a shift in price delivery, right? So anyone trying to look for down candles, well, you didn't get that, did you? Oh, man, it didn't come back into my down candle. What the fuck, man? Well, no shit. No. You think it's always going to do that? No. Well, I guess you could argue it did here. These two down candles put together, you could argue that. But, you know, to each their own. I would argue that those two put together are not the lowest. That one's the lowest. But, you know, sometimes the shit is kind of subjective, isn't it? But if it's not obvious, man, then I probably wouldn't want to go with it. But something like this is very obvious, and it's aligning time, price, context, right? Literally the secret to the fucking universe is right here. Okay? Time, price, context. You align that. Maybe not the universe. I might have been overzealous. Time, price, context, right, is all right there. Time, macro, time, 9 o'clock open, time-based entries. A lot of people don't teach time-based entries. I do. Okay. What is the price inversion? Daily gap or weekly gap, whichever one it was, right? So you got your time, you got your price. What's the context? We should trade higher because we have low resistance highs right there. The 15-minute might look a little bit better, to be honest with you. This shit right here, boom, look at this. Look at those highs, low resistance highs. Beautiful. That's the context. We should trade higher. We should trade higher. And we do. I didn't tweet anything. I should have, but I didn't. I was like, bro, you know, I'm not going to tweet everything. I'm not going to tweet every move or every thought like some people do. But, you know, I mean, that to me, this is worth knowing. You know, that's why I teach it to you. It's worth knowing. So hopefully that answers some of your questions, right? Why would you trust this? Why would you trust that? Or sometimes I don't. But remember, I'm not always right, chat. I was right today, but I didn't make money because I didn't press the button. So, you know, I don't take every setup. Sometimes I miss. Sometimes I take losses. Sometimes I'll take bangers that, you know, are like, holy shit. But that's not every day and that's not every trade. All right. You know what? I'm glad one of you brought that up. I was going to play a reaccumulation, but it never went back into that. Never did it. Left this imbalance, that gap, left that open. This imbalance within the potential reaccumulation left that whole shit open too, and just kind of respected this one and took off. So that's like a very, very bullish market. When it leaves concepts open like that, it's very, very bullish. We could argue that this was the first one created on the way to opposing liquidity, right? So would you expect that one to get traded into? No. That is either going to be a breakaway imbalance, or it might trade into it, but it's not going to, you know, trade all the way down to the low end of it. And then that one here, and then this one here. So you would have had to take the earliest one, but then your stop would have had to probably been down here at the low end of the reaccumulation. And that would have been a little bit, I wouldn't have done that. I wouldn't have done that. You can, but I wouldn't have done it. And at $20 a point, you want to take good trades. You know what I mean? You want to take a trade. So, you know, that's it, man. That's what I wanted to focus on today. First presentation, time, price, context, and the opportunities that presented themselves. I think the rest of the afternoon is going to be not worth trading. That's my honest opinion. I don't think it'll be worth trading. I could be wrong. Sure. There's probably going to be a good setup. But unless something is super obvious, then I'm not going to do it. I'm not going to do it. So here's where we are on the day. We're in the upper half of today, so we're in a premium market. We do have some lows down here. That was at the same time, again, from like this morning when that 9 o'clock, right? When NQ took off, you see that same thing here, right? You see it on ES, okay? And actually, one could argue there was a late entry on ES right there. See that? 5-minute imbalance trades a little bit into that. So takes off. So yeah, I don't know. Maybe we take the lunch low and then run for those highs. We have an imbalance up here too. That one is currently the breakaway imbalance lower, by the way. All right. So, I mean, I guess I could see that. But again, listen, I have been through and have seen so many days like today where the morning session or the AM session provides just a whole lot. And then if you try to force something in the PM session, it's not going to be as quick. It's not going to be as clean typically. And It's just almost never worth the trouble, if that makes sense. It's almost like the leftovers, you know? We don't want the leftovers. We want that freshness. We want that freshness. Man, we just took that lunch load, didn't we? We just went right for that shit. We just went right for that, chat. Why couldn't we do that on Dow last week? Speaking of Dow, where is she at? Where is she at? You know, I wonder if we discussed 43,462 last week. I don't know, chat. Maybe. Maybe not. Where's our low of the day currently? Oh, the halfway point of that imbalance that was pointed out last week. That's pretty cool. That's pretty cool. So, hit that this morning during London. Had all this business, and then 920 actually lagged behind. So Dow was the laggard today, where the other two, ES and Q, rallied to the upside during that 9 o'clock hour. The Dow was like, oh, I'm ass, and then just went for these lows, and then caught up and got back in sync. So that would have been a good buying below old lows, buying in that hourly imbalance that I've already given you, below an old low, by the way. But again, you know, I'd rather not, you know, trading the laggard, longing the laggard. That's typically not what you want to do. It can be done. It's just usually not ideal, but nonetheless, that's not bad. And then the only other markup I have on here from today, at least, was just small time frame equal lows. But you know, that wasn't enough for me to short something like that. So I was like, man, fuck it. So excuse my French, but you know, that's that. And I have nothing else for you in that regard. But, you know, we're in the middle of the range today, actually probably near a little bit above the halfway point, but the higher time frame, we're kind of in a range. And then on an intraday basis, we're in the range as well. So to me, again, for the record, okay, let the record reflect. I think the PM session might be scalp worthy, but I don't think it's going to be great. Okay? I don't think it's going to be great. So what do I mean by that? Well, let's take everything off because we got a bunch of shit on here. If you look at our current range on a daily time frame, right, which you should have done this weekend. That's what the weekends are good for when the market's closed. Look at the higher time frames. This is basically our current range. The most recent range on the daily / weekly. Okay. Right around or just above 20,000 all the way up to 21,300 and some change. And so our halfway point is right around 20,670. Look where we're at today. We're right near that 50%. Okay. This type of environment, that's usually gonna run stops, trade back in the range, or, you know, trade sideways. It could do that, you know, stuff like that. So the higher time frame for Nasdaq, we're near 50%. And then again, what I just said, the range on the day. Look at the range of the day. Our current low of the day, 481 up to 724. And we're right near that too. So 50% on the daily, 50% of the day. I wouldn't trade this. I wouldn't touch it. Okay. We could go lower. We could go higher. And if I can justify either one, that's a no-go, man. That's a no-go. And yeah, 2020, hopefully I answered that question earlier. I would look at the 1 minute, maybe like the 5 minute as well. So, but you backtest, man. The charts, okay? The charts and your journal and you reviewing your performance is going to teach you way more than I ever could. Okay. I want to make that a point. Like, sure, I'll show you a bunch of shit. Okay. And they're wonderful tools to use. But you're not going to understand them until you use them or you study how they've been used. Okay. We did a very brief back testing today. I only showed you a couple days worth. That's nothing. That's nothing. Oh, it worked a couple times and then didn't work on one of the examples. Right. We'll go figure out why it didn't work. And go figure out why it did work too. Why did the one, let's go back. Why did this work down here? I've already explained it. It was the first one, but we're in a daily discount and an intraday discount too. And we have liquidity on the upside. So all roads lead to upside. And so, yeah, it was bearish briefly, and then it got disrespected. So that becomes an inversion in a discount on a day that's likely to trade higher. So it worked. It's probabilities. It's not absolute, but it's probabilities. And guess what? That would have been a 1 minute time frame wick entry. You would have gotten virtually no drawdown, straight to profit. And that's the trade that everybody wants. Everybody wants that. Because trust me, once you do it, you'll never forget that. I promise you'll never forget it. Or at least you'll never forget the feeling of looking at a trade and it just immediately goes your direction, barely goes against you and just runs and runs and runs. Probably, I saw this on Twitter too. A lot of people got out at this first high and they didn't want to hold for the rest of it. And, you know, to me, that does show a little bit of, I don't want to be an asshole. You know, it's not bad to get out at a new high. And they may not have seen the higher set of highs, or they might not have trusted that, and that's okay. But that's what happened to a lot of people today. They got out at a new high, and then they watched the rest of it fly without them. And now they're going, oh, man, fuck. I got out too early. And they're blaming themselves, but they don't understand why they did that. Because they didn't probably do a full analysis, or they didn't trust that it was going to trade up here. Just because, let me say this, and I hope I don't fuck this up. Just because you know the market's going to trade to equal highs or equal lows, okay? Just because you can get the direction right, that doesn't mean that your trading is going to be that way too. You know what I mean? You could take a really good trade, but get out early because you're scared of it coming back on you. Or you see the money and you're like, holy shit, I just need to lock that in. Right? Say like for a combine, for example, oh shit, I could lock in 500 right now. I might as well just do that. Boom, let me get that $500 a day. And then you realize you could have made like $2,000 if you just held it for longer. For another, what, 20 minutes? Because you're not used to taking trades that immediately go your direction and that fly and fly and fly. And you're not used to it. And I know this shit because I went through it too. I went through all this stuff. Why do you think I tell you guys these things? Why do you think I give you questions you've never even thought of before? It's not to say I'm smart or anything. Probably not. My exes probably would agree with that, you know? But it's like, I know the road that you're on. I know the pitfalls. I know the dangers. I know, you know, I know where you're going to go wrong, where you're going to get frustrated and stuff like that. And I know exactly what it's like to start getting trades like this. And it's scary. But once you do it, I promise you're just like, oh my God, I've cracked the code. It's like I've finally cracked the code. But, you know, you got to get used to that. Right? Getting that good trade and then being able to hold it versus just random trades that you sit through, draw down, or they sit around your entry and you're just like frustrated. It's like, no. Once you start taking fire trades, there's a certain way to do it, bro. How do you know when to hold or when to get out? How do you know when to move your stop? Okay, I want to move my stop. I don't know where to move it to. How do you know that? I've taught you all these things. market maker models, time price context, buying below the open, utilizing macros, utilizing concepts that invert with previous concepts. All these things I've shown you. So you know what to do and how to do it. You have the tools, but it's implementing the tools properly. That's what's going to do it for you. And I don't know how we got on this tangent. I don't know how we got here. I think it was because I don't know, I'm just going to move on. When it comes to thinking in probabilities, you would say trading is generally 50-50 or lower. Oh, no, Felix, no. Trading is not 50-50. If you go in there without a plan and all that shit, oh, then yeah, probably. But to me, trading is not 50-50. Shit, I've had weeks, bro, where it was more like 80-20. 80% right, 20% wrong. Okay, so no, I don't believe in 50-50. If it was that easy, then just take a coin flip and buy it if it's heads, sell it if it's tails. Use a 1 to 2 RR and just fucking roll with that. See where that goes. See where that gets you. I wouldn't do that personally, but you know, hell, some dude just a chicken just passed a fucking combine, or I don't know if it was a combine or a funded challenge. Literally just some chicken passed. So, you know, money management works, bro. Money management works. All right, let's study this then. We'll do a quick study and then we'll fucking hop off because we are at the 1 p.m. macro. So we talked about how we could take the lunch low and then run for those highs and then up into that imbalance up here because that's our current 5-minute breakaway. So we shall see. I'll put an alert at 59.24.5. We'll see if we can get something like that. It should be higher than that. But that's just the highs. It's not a big deal. And then this would become, again, in theory, that would become the inversion. So if we could, and again, don't trade this. This is not trading advice, but if it's going to do what I thought it could before all this formed, you know, simply 1 to 2, you know, would probably look something like that. But I guess if we dug into the imbalance, we could widen the stop just a hair, something like that. I could see that. Right? So don't take it. Right? Don't go on a live account. Don't go on a combine, you know, or anything like that. But I would watch it, you know, to see what happens. But before I gave you this, okay, I already told you, I don't think the PM session is worth trading. I don't think so. I'll watch it. I'll look at it. I'll you know, screenshot it. I'll take a screenshot real quick. Okay. I'll take a screenshot. Then we'll see what happens. But I'm not saying to take this live or demo or nothing. You can take it on paper. Okay. You have my permission to trade paper, trading view paper, or just screenshot. I don't care. But do not take this live. It's just a study. All right. Because as always, I want to teach with live price. I don't want to always, you know, to show you examples, I have to go into hindsight. But to show you that I know what the fuck I'm talking about, I tried to give you guys things in advance. So this will be the one for today. Either this comes down and then I get stopped, or it doesn't come down at all and it goes for the highs, or it comes down, gives that, you know, hypothetical entry and then runs, you know, for that. We'll see how it goes. But that's a nice up candle on that 5-minute time frame, isn't it? 1 o'clock's about to come up too, so we'll give this a few minutes. I want to let this pan out over the course of a few minutes. Oh shit, what's today? Monday, right? Yeah. Okay. What do you guys think? Any last minute questions before we hop off here? There's still like almost 30 of you that haven't liked the stream. Do me a solid. Drop a like on the stream. Drop a like on the stream. I just talked with some friends new to trading. They have to develop the psychology skills to hold a trade at TP. Yep, I agree, Alex. We had a call on that in channel 96, when to hold, when to fold. Oh yeah, when to hold and when to fold. That does sound like something that I would title the stream. The titles got wild there at the end, man. Like episode like 150 or 160 something. They ended up getting like wild. I had a lot of fun doing that. I had a lot of fun setting records in the MLM industry. All right, so I'll leave it at that. Won't try to brag too much. You know, ego is the enemy, right? But I doubt that'll ever be done again. I doubt what I did will ever be done again. And I stand on that. Scalper's Paradise, those 3 episodes, Pipaholics Anonymous, come on. And so many others. I'd have to look at the Google Drive to remember the rest of the names, but yeah, that shit was fun, dude. Super, super fun. Oh yeah, Adidas. All day I dream about stops. Oh yes. Oh yes. I remember it all. I remember it all. Seeing how this is going, this is probably not going to come back to that entry. Just so you know. Just so you get my thought process. Cream de la Cream. Yeah, that was a personal development one. I think I still have those PowerPoints. That's on this YouTube channel, actually. Matryoshka. Yeah, I remember that too. We went from the higher time frames all the way down to like the 1 minute. We went like daily, 1 hour, 15, 5 minute, 1 minute. Aligning your sights. We did all kind of shit, dude. We did all kind of shit. And I'm going to have some more information tomorrow. I'll have an announcement tomorrow that you guys are definitely going to need to hear. But yeah, as far as MLMs go, I don't think what I did will ever be outdone. I really believe that. I hope it is. You know, I hope somebody out there just creates 200 hours of amazing content, PowerPoint, maybe not all of them, but just PowerPoints and explanations and bro, trade recordings. I recorded trades with entries and exits and why I was moving my stuff. Bro, nobody's fucking out doing that. Ego is the enemy, yes, but dude, no, who is gonna outdo something like that? It won't be outdone. But if it is, I will absolutely congratulate that person. If they can show actual trades, recording, entries, exits, stops, explanations, or even like maybe tweeting, like I do that sometimes, you know, and just really outdo what I've done, I would absolutely respect that. But until then, there's not a crown, but if there was one, I'd be wearing that bitch. It wasn't 250 hours, but it was close to, I think it was over 200 actually. I think so. I think it might have been over 200 or right around like 198 or something. It was very close. And some sessions just weren't even saved or weren't, favorited. So they disappeared. But shit, imagine if that kept going for another 2 years. I would have had like 400 sessions, dude. It would have been insane. Oh, that's what I was going to tell you. Sorry, I got sidetracked with my bullshit. That's what I was going to tell you. There's movement in the MLM industry right now, and certain content has to be remade. And it's bad enough losing 2 years of content, but imagine losing like 4 or 5. Shit, dude, imagine if I lost this channel. 700 videos between the videos and the live streams and the shorts and stuff. 700 videos fucking gone. Oh man, dude. That would not be a good day. That would not be a good day. I'd have to fucking hit the gym. I would have to hit the gym and just go find the heaviest weight and just break my fucking back. You know what I mean? I'd have to start breaking windows, and I don't know. I wouldn't do all that, but that would be this is I wasn't going to point this out, but I'm starting to think that that's a reaccumulation. It wasn't really utilized for distribution all that much, I guess. It kind of was, but I'm watching it. When I'm looking at the chart, I'm looking and I'm referencing these. I'm trying to see if that's going to act as a launching pad to run that shit higher. I'm just looking. Okay, I'm just seeing what it's going to do. But at this point, I don't think it's going to come down here. I think if there's going to be an entry, it would probably be this imbalance right here. Or here, and just launch. Okay. Yeah, the After Hours Club, Naruto. I remember that. We only did like 12 weeks of that. And then I had to retire it. Because they couldn't let me do what I wanted to do. You've seen me bring guests on this channel. I've had plenty of guests on this channel. I want to do a lot more of that in 2025. I want to do a lot more of that in 2025. I want to bring on some guests. I don't care. You know? Anybody. I don't care. If they want to make a video, or, you know, if you want to come on here for like 5-10 minutes and just explain a trade that you took, or maybe you want to explain the trade that got you funded, I'm all for it. I'm all for it. You want to do that? I can make it happen. I'm not somebody who just hogs the spotlight. If you want it, I'll give it to you. I mean, you got to come with it. You can't just be like, oh, you know, I want to be in front of an audience for no reason. No. You got to have a reason. But if you have one, I'll give it to you. I'll absolutely give it to you. Is there content from back then that you wish you had? A couple, Jordan. Like the Pipaholics Anonymous video. That was one that was worth keeping, in my opinion. I have it. I have most of that stuff. I keep telling you guys that. It's all on a Google Drive. I have it, but, you know, it's watermarked, obviously, so I can't really do anything with it. But I still have that PowerPoint presentation. But at this point, Jordan and everybody else, at this point, though, I think the YouTube, how it is now, between the live streams and the playlist, I think this channel, I think I outdid what I did in the in that industry. But if we're talking about the industry only, oh yeah, that's not getting outdone. It won't happen. Not by a single person. It won't. It will not. All right, so we just dug into this 5-minute inversion, 5-minute bullish here. So now we're probably ready to launch. And so, yeah, that ended up not being a reaccumulation. I told you I was just watching it. I'm just trying to see if it's going to do that. And it didn't. But again, I'll go back to this one more time. The 5-minute looks actually pretty decent. Again, inversion here. You have one created on the way up here. And so we're like overlapped right there. So we'll see how it goes. But again, I'm not going to take this. I don't suggest you to take it either. But we gave it a few minutes. It hasn't you know, hit that up there. It hasn't even hit the entry really either. So we're going to cut it here. All right. And I appreciate that, Naruto. But yeah, we will be here same time, same place tomorrow on Tuesday the 19th for the next live stream. So go read, go do what you got to do, or go back to work. Some of you, you know, don't slack off at your job and get fired. All right. Print off your charts and then go tonight or whenever, you know, do that back testing. Go look at the first imbalance created after 831. After equities open, essentially. Okay. Do that, learn some shit, and be good. And I'll see y'all tomorrow.